Hello and welcome to my morning note. There's been a lot of angst and argument about central bankers of late, but one central banker has been very much conspicuous by his absence. Nobody is talking about Mario Draghi of the ECB. Now, is this because the eurozone crisis is at last behind us, or because people are getting worryingly complacent? With me now to discuss this is the chief economist of CIB, Michala Marcussen. Michala, thank you very much for joining me once more.
Thank you.
Let's start by taking a look at supply manager figures for the four main countries of the eurozone. And this, at first glance, makes it look as though the eurozone really is beginning to solve its problems. Spain is caught up with Germany. Is it the way it looks?
We are seeing continued strength, in particular coming out of the Spanish export sector.
Right.
So that's very encouraging. But once we look behind the scenes and we look at other areas of the Spanish economy, we have to realize that there's still quite a lot of headwinds blowing in. Financial fragmentation is clearly one, still very high unemployment is another, and of course there's continued deleveraging both from the private sector and the public sector.
Now, if we take a look at this next chart, we can see that banks' holdings of the problem countries of Italy and Spain's government debt increased a lot after the LTROs by the ECB last year, but has actually continued steadily to increase since then. What are we to make of that?
Well, I think first of all, you can understand that from the perspective of a bank trying to rebuild its balance sheet, the risk weighting of a government bond is very attractive, and that gives a good way to rebuild the balance sheet, as long, of course, as there's nothing that goes wrong on that government bond.
But isn't that rather a big condition to be making just at the moment, that, when there is this worryingly symbiotic relationship between bank credit and sovereign credit?
Well, I think that if we look at the European debt crisis from a sort of bird's eye picture view, there has been a lot of very good progress in repairing Europe. And of course, the OMT did help tremendously. But what President Draghi keeps telling us is that he's given us a window of opportunity, and in that window of opportunity, one of the things that he often cites to us is the importance of banking union. And that's exactly what banking union is about, ultimately, is breaking that link between the banks and the sovereigns, what was termed last year as a vicious cycle, sometimes called the doom loop, and that's really important to remove that. So while this is an attractive solution, it can also be part of a future problem if those institutions don't come in place quickly.
Now, one big part of sorting out this mess is the asset quality review, which is currently underway. How is that going to play out?
Well, I actually think it could be a very good opportunity for Europe, but much will depend on how the asset quality review is managed.
Right.
When we think back to past banking crisis, Japan, the Nordics, even in the US, the turning point of the crisis was always that moment in time where finally people felt that there was credible visibility on the troubled assets and there was a credible solution in place for recapitalization. Now, we've already had parts of those solutions come into place for the banks in the periphery, but I think this asset quality review, the ECB needs to communicate in a timely manner about what's going to happen, and most importantly, there needs to be a clear plan in place for what would happen in the event that there were a number of banks that needed capital and that couldn't get that capital through the markets.
It sounds to me as the potential mechanism for us to get a new leg of the crisis if the AQR isn't managed successfully.
That's right, and I think if we look ahead to the ECB meeting, I do think this is one of the areas where we're going to see an increasing number of questions coming to the ECB. Unfortunately, banking union is still quite slow in moving ahead.
What we're looking at here is the two critical measures: how bank stocks have been doing during the crisis and how Spanish spreads compared to bunds have been doing. If you look at the spreads, it does look as though the crisis is alleviated considerably. If you look at bank stocks, it looks as though people are still very worried indeed. Does that reflect the sense that we are now moving towards a bail-in system?
Exactly. I think that this tells us two stories. First of all, it tells us what we've heard now for several months from many of the central bankers. President Draghi has told us much. Bail-in is not a problem if the rules are known ex ante. And that's exactly what we achieved last week. Some of those ex ante rules have now come into place. The second thing that I think we see on this chart is that the underlying economy is still very weak. And that, of course, is a headwind in itself to the earnings potential of banks in the periphery. But again, I think it's important to recognize that there is a very dispersed situation across the European banking universe. So we do have to distinguish between those different segments.
Okay, Michala, thank you very much indeed. It does look as though the eurozone crisis has dwindled compared to where it was, but it isn't totally behind us. And there is still no cause for great complacency. Perhaps people should be paying rather more attention to the ECB and to the progress of the asset quality review than they are at present.